Turtle Soup is the most basic ICT setup. Once you understand it, you will understand the logic behind all smart money models. Not only boring theory, let's take my recent trade on NAS 100, where I caught the movement and earned $3,000. I'll show you how I waited for run-on liquidity, what confirmation I needed, where I hid my stop, and how I accompanied the position. The chart, step-by-step instructions, and all details that turn school turtle soup into a truly profitable tool. Let's go. For those who are unfamiliar with this model, I will briefly explain it and then proceed to my trade. Turtle Soup is an intraday setup based on liquidity withdrawal and reversal. I use it mainly during the New York session, when the main volumes enter the market. The essence is simple. The market makes a run on liquidity. It removes stops above or below the local extreme and then returns inside the range. At this point, there is an opportunity to enter, with a clear stop and good potential. But there are two important conditions for this setup to work. 1. The presence of daily liquidity before the New York opening. This is what will be removed at the moment. 2. The zone of interest behind the liquidity, where the price may go after the liquidity is removed. This could be FVG, an order block. The main thing is that it is behind the liquidity grab. Now that you have an idea of how Turtle Soup works, let's move on to practice. I will show you my real trade on NAS 100, and we will analyze everything from the idea to closing the position. My analysis began an hour before the New York session opened. First, I opened H4 to determine the higher zone of interest. The chart showed equal lows, which is a signal of potential liquidity, and just below that, an imbalance that the price could be heading toward. At this stage, I already had an expectation. The market could make a run on liquidity, remove the equal lows, and give a reaction from the imbalance zone. At the same time, I noted the PDH for the current day, although in the classic approach, we work with daily liquidity. This time, the target, double bottom, was very close, so I noted it for context. Next, waiting for New York. I did not rush to enter, but waited. Liquidity grab was a priority, as the structure and zone of interest suggested exactly such a scenario. By the time the session opened, I had already highlighted all the key levels. I switched to M15 and then to M5 to track the price reaction. Immediately after the opening, the market withdraws liquidity from below and enters the zone of interest, exactly according to the scenario. But this is not yet the entry point. It is important to wait for a return inside the day's range. Only then the setup will be considered valid. As a reminder, in classic Turtle Soup, we work with daily liquidity, PDL, PDH, and wait for a return to the range. In my case, it is PDL, and it is to this zone that the price returns, leaving FVG on M5. This became my entry point. I would also like to draw your attention to the candle itself, which withdrew liquidity. After it, the price corrects and returns to the zone. On the pullback to 50% of this candle, and simultaneously to the middle of the FVG, I set a limit entry, stop loss, beyond the FVG zone. Take profit. Initially, I set it at a zone that seemed logical, but from the current point of view, it would have been more correct to set it at PDH. Nevertheless, the risk-reward ratio in my trade was more than 1 to 3, so the decision was justified. I stayed in the trade because all the elements of the setup were met. Liquidity withdrawal, zone of interest, retracement, FVG, and a clear structure. Additionally, my trade was reinforced by another element, the power of 3 model, which fit perfectly into the current context. I won't go into detail about PO3 so as not to overload this video, but if you watched my previous video, you'll immediately recognize the structure: accumulation, manipulation, distribution. This is precisely the logic behind the movement. First, there was an accumulation of liquidity before New York, then manipulation in the form of PDL withdrawals, and only after that did the real movement begin, which is when I entered. PO3 in this case acts as a context that amplifies Turtle Soup itself. When you see such a structure, you can be more confident that this is not a random bounce, but a controlled scenario. And in such cases, the setup works with maximum accuracy. If you haven't seen the video about PO3 Plus yet, be sure to watch it. There, I explain how to use the 0 o'clock and 8:30 EST zones, how to find confirmation through FVG, and how to enter a trade. To reinforce everything, I will show you another example, a more classic Turtle Soup setup, where liquidity is formed within the day. This time we will analyze the DXY chart. 1. Preparation before the New York open first, the higher time frame. I open H4 and see the zone of interest at the top, fair value gap. I immediately mark it as a potential area for liquidity withdrawal. Next, I highlight the PDL and PDH. This is important. Before the New York open, these zones can be shifted if the price goes beyond the current extremes. I always review the levels before the session. 2. Session opening and liquidity withdrawal. With the start of New York, the price immediately withdraws liquidity from above, right in our marked zone with FVG. This is the first signal. The market has tested liquidity, and now a return scenario can begin. 3. Return and confirmation. A few minutes later, a return inside the range. The price leaves a new FVG, and this becomes my entry point. Please note, here, liquidity was withdrawn again. The price went below the stops from above once more. This is normal, it happens. The main thing is to keep in mind that, in such cases, the minimum RR should be no less than 1 to 3. 4. Entry and follow-up. After the second throw and the formation of a new FVG, the price returns to the PDH level, and here I enter a short position. The goal is to grab London liquidity. The RR turned out to be 1 to 4, which suits me perfectly. 5. Conclusion and rule. The trade closed at take profit, and this is an important example. Sometimes the market withdraws liquidity again. This is not a breakdown of the setup, but part of the scenario. I simply take this into account in my risk-reward ratio and stick to the rule. No more than 2 attempts to enter a single scenario. This example highlights how versatile the Turtle Soup model is. It works both at the extremes of the day and at intraday levels. If there is liquidity withdrawal, confirmation through FVG, and a clear risk ratio, there are days when all the conditions of Turtle Soup converge, and the price still goes sideways. The market takes a break, and you are left without a trade. What to do on such days? I use MiloBot PRO. It is a fully automatic advisor. It trades according to its algorithmic logic, is not connected to ICT setups, and does not interfere with your manual work. While you wait for the perfect Turtle Soup or PO3, the bot trades quietly without your participation. In 4 years, the account on which MiloBot operates has grown from $34,000 to $272,000. All statistics are available on my FX book. You can check every last tick. Would you like to see for yourself? Download the free demo version, run it in the tester, and see how it trades. The link is below this video. Let your money work even while you watch and learn. As I said, Turtle Soup is a ridiculously simple model if you stick to the rules. Run on liquidity, return per level, entry from FVG. Stop it behind the tail of manipulation or the edge of FVG. The goal is a minimum of 1 to 3. Write down this chain, attach it to your monitor, and check it tomorrow on a live chart. Follow all the steps, and you will have a chance to earn the same plus 3-4R in one morning. Did you find the video useful? Like it and write in the comments what questions you still have or how Turtle Soup is already working for you. Subscribe, that way I can see that the content is really valuable and make even more practical videos.